Hello everyone, welcome back to chapter 2 Money and Banking. So far we have studied money supply, commercial banks and how banks create credit. Today we are going to study the institution that supervises the entire banking system in India, the Reserve Bank of India or RBI. Let me ask you something. You have probably heard the names like SBI, HDFC Bank, ICICI Bank, Punjab National Bank and many others. These all are commercial banks. But have you ever wondered who makes sure that these banks follow the rules? Who prints most of India's currency notes? Who manages the country's foreign exchange reserves? Who helps the government with banking operations? And during a financial crisis, who supports the banking system? The answer to all these questions is the Reserve Bank of India. Think of a school. Every class has teachers, but who supervises the entire school? The principal. Similarly, every bank serves customers, but who supervises the banking system? The RBI. This analogy is very important. Commercial banks deal with customers every day. The RBI manages and regulates the overall banking system. By the end of today's lesson, you will understand why RBI is often called as Banker's Bank, the bank of issue, and the controller of credit. We'll also look at practical examples and board exam tips so that topic becomes easy to remember. Before understanding the RBI, let's first understand what a central bank is. Every country needs an institution that looks after its entire financial and banking system. This institution is known as central bank. A central bank is the highest financial authority in a country. It does not exist to earn profits. Instead, its main objective is to maintain financial stability and support economic development. Let's understand its major responsibility. First, it regulates the commercial bank. This means it frames rules and ensures that bank operates safely and responsibly. Second, it issues currency. In India, most currency notes are issued by the RBI. Third, it controls the availability of credit in the economy. Too much lending can lead to inflation, while too little lending can lead to economic growth. Slow economic growth, I would say. The central bank tries to maintain the right balance. Fourth, it implements monetary policy, which we will study in the next part of the chapter. Different countries have different central bank. In India, it is the Reserve Bank of India. In the United States, it's called as the Federal Reserve. In UK or United Kingdom, it is called as Bank of England. Although the name differ, the role is broadly similar: to maintain stability of country's financial system. So in your definition, always include the phrase apex financial institution. This is an important CBSE keyword. Now let's focus on India's central bank, the Reserve Bank of India, commonly known as the RBI. The RBI was established on 1st April 1935 under the Reserve Bank of India Act 1934. At that time, it was privately owned. Later, on 1st January 1949, after India became independent, the RBI was nationalized. Today, it is fully owned by the Government of India. Its headquarters are located in Mumbai, the financial capital of India. Now, you may wonder, what does RBI do exactly? It supervises commercial bank, issues most currency notes, manages country foreign exchange reserves, acts as government's bank, and plays an important role in maintaining financial stability. Here's an interesting point. You and I usually don't have savings account directly with the RBI. We use commercial bank like SBI, HDFC, ICICI or PNB. The RBI works mostly behind the scenes, ensuring that banking system functions smoothly and safely. Imagine the RBI as the captain of cricket team. The players, the commercial banks, are visible on the field, but the captain coordinates strategy, maintains discipline, and ensures the team work together. Similarly, RBI guides and supervises the banking system. So remember these three facts: established 1935, nationalized 1949, headquarters Mumbai. These are commonly tested in school examinations. Students often get confused with RBI with commercial bank. So let's clear the confusion today. Think of a school. The principal manages the entire school, sets rules, supervises teachers and ensures discipline. Teachers, on the other hand, teach students every day. Similarly, RBI is like the principal of Indian banking system, while commercial banks are like teachers who directly interact with people. Let's compare them one by one. Nature. The RBI is India's central bank. Commercial banks are institutes like SBI, HDFC, PNB, ICICI that provide banking services to public. Main function. The RBI regulates and supervises the banking system, whereas commercial banks accept deposits, provide loan, offer services like UPI, ATM, lockers, and internet banking. Next is currency. Most currencies notes in India is issued by RBI. Commercial banks cannot print or issue currency. Number 4, monetary policy. The RBI designs and implements monetary policy to control inflation and support economic growth, whereas commercial banks simply follow the policies and guidelines issued by the RBI. Last one is customer. You and I usually have bank account in commercial banks. The RBI generally do not open saving account for general public. Now ask yourself this question. When your parents deposit this money to SBI, are they dealing with RBI? No. But SBI itself work under the supervision of RBI. So that's the relationship. If a question asks for difference, write them in table. It's easier to read and usually scores better. Now that we know what RBI is, let's understand what it actually does. The RBI performs many functions, but for CBSE you should remember 6 major functions. The first one is bank of issue. This means RBI issues most currency notes in India. Second is government's bank. The RBI manages the banking transactions of the government of India. Third is bankers' bank. Just as we keep our money in commercial banks maintain record with the RBI. Fourth is lenders of the last resort. If a commercial bank faces a serious shortage of funds and cannot borrow from anywhere else, the RBI provides emergency financial assistance. Fifth one is custodian of foreign exchange. The RBI manages India's foreign exchange reserve and helps maintain stability in the foreign exchange market. Finally, the RBI acts as a controller of credit by using monetary policy tools to influence the amount of money and credit in the economy. Don't worry, we'll study each function one by one with examples. By the end of the lesson, you will not only remember the function, but also understand why they are important. Let's study the first 2 functions of RBI. Bank of issue. Whenever you hold 100 rupees, 200 rupees or 500 rupee note, have you noticed the words Reserve Bank of India printed on it? That's because RBI issues most currency notes in India. The RBI ensures that there is enough currency available in the economy. If there is little to cash, people face problems in making transactions. If too much money circulates without corresponding production, it can contribute to inflation. So the RBI carefully manages the supply of currency. So under Indian law, the 1 rupee note is issued by Government of India, while other currency notes are issued by RBI. So mention this only as interesting fact if there is anything in the examination. Next one is government's bank. As you have a bank account, the government also needs banking services. The RBI acts as a government bank. It receives taxes and other government revenues. It makes payments on behalf of government such as salaries, pension and other authorized expenditures. It also helps the government borrow money when required. Imagine the government needs fund for building highways, schools or hospitals. The RBI assists in managing such borrowing operations. So whenever you hear the word Government's Bank, remember the RBI performs banking services for the Government of India. So don't just write the heading, always explain 1 or 2 services performed under each function. Now let's study 2 of the most important functions of RBI. Bankers' Bank. You have heard that we keep our money in commercial banks. But have you ever wondered where commercial banks keep a part of their reserves? They maintain accounts with RBI. That's why RBI is called Bankers' Bank. The RBI also guides, supervises and supports commercial banks to ensure the banking system remains stable. Next one is lender of last resort. Now imagine a difficult situation. Suppose a commercial bank suddenly faces a shortage of funds. Many customers arrive to withdraw money at the same time. The bank does not have enough liquid funds immediately. What should it do? If no other institution is willing to lend, the bank can approach the RBI. The RBI provides emergency financial assistance. Because it is the final source of support, it is also known as lender of the last resort. Think of a family. If you urgently need money and no friend or relative can help, you may turn to your parents. Similarly, when commercial bank cannot obtain funds anywhere, they approach the RBI. This function helps maintain public confidence in the banking system. If people know that banks have support from RBI during emergency, they are less likely to panic. So in your answer, always explain why RBI is called lender of the last resort, because it provides emergency loan when other sources are unavailable. Now let's study another important function of RBI, custodian of foreign exchange. Firstly, let's understand what foreign exchange means. Whenever Indians buy goods from other country, travel abroad or pay fees to a foreign university, they usually need foreign currency. For example, if you travel to USA, you will need US dollars. If you want to study in UK, you need pounds. If an Indian company imports machinery from Germany, it may need euros. Who manages these foreign currency reserves for India? The answer is the RBI. The RBI maintains Indian foreign exchange reserve and helps ensure that country has enough foreign currency to meet international payment obligations. It also works to maintain stability in foreign exchange market. Sudden extreme fluctuations in exchange rates can create uncertainty for businesses and consumers. Think of the RBI as the guardian of India's foreign currency reserves. Just as a family keeps saving aside for emergency, the country also maintains reserve to support international trade and financial stability. So in the exam, write that RBI maintains foreign exchange reserve and helps maintain stability in the foreign exchange market. Now let's discuss one of the most important functions of RBI, controller of the credit. You have already learned that commercial banks create credit by giving loan. But what if bank starts giving too many loans? People may spend more. Demand may increase rapidly. If production does not increase at the same pace, prices may rise. This can contribute to inflation. On the other hand, if bank stops lending too much, businesses may struggle to expand, investments may fail, and economic activity may slow down. So there's need to be a balance. The RBI helps maintain this balance by controlling the amount of credit in the economy through monetary policy. When the RBI wants to reduce excessive lending, it can make borrowing more expensive or reduce the availability of funds for lending. When it wants to encourage economic activity, it can make borrowing easy. We'll study the detailed tools of monetary policy like repo rate, reverse repo rate, CRR, SLR, and open market operation in the next part of the chapter. For now, remember this, the RBI acts like a traffic controller. If there are too many vehicles on the road, traffic needs to be regulated. Similarly, if there is too much or too little credit in the economy, the RBI takes steps to maintain the balance. So do not list monetary policy tools in detail here. Simply mention that RBI controls credit through monetary policy and explain the objectives. Let's understand the role of RBI through a simple example. Imagine that prices of many goods are rising rapidly across the country. Families find it more expensive to buy groceries, fuel, and other essentials. Businesses also face higher costs. The RBI closely monitors such situation. If it believes that excessive borrowing and spending are contributing to inflation, it may take policy measures to moderate the growth of credit in the economy. So commercial banks then adjust their lending according to RBI's policy. Over time, these actions can help support price stability while also considering economic growth. The important point is that the RBI constantly tries to maintain balance. Its objective is not only to control inflation but also to support a stable and healthy economy. So before we finish, let's revise the 6 functions of RBI. Remember them in the same order every time. Also avoid these common mistakes. The RBI is not a commercial bank. It generally does not provide regular savings account to the public. The commercial banks do not issue currency notes. In your descriptive answers, write the function, explain it in 1 or 2 lines, add a simple example whenever possible. The structure makes your answer very strong. So, bank of issue, government's banker, banker's bank, lender of last resort, foreign exchange custodian, controller of credit. So you can make a sentence. Big girls bake lovely fresh cakes. Big girls bake lovely fresh cakes. Okay, this will help you in remembering the functions. So now we have finally completed the most important topic in money and banking chapter. Today we learned what a central bank is, why India needs a Reserve Bank of India, and 6 major functions performed by RBI. We also understood how RBI regulates the banking system, supports the government, manages foreign exchange reserves, controls credit, and helps maintain the financial stability. So before you leave, here's today's challenge. Why is RBI called Bankers' Bank and the lenders of last resort? Write your answer in the comment box using your own words. If this lesson helped you, please like the video, share it with your classmates, and subscribe to the channel. In the next lesson, we'll study monetary policy and all its important tools: repo rate, reverse repo rate, bank rate, CRR, SLR, open market operations, moral suasion, and margin requirement. This is one of the most scoring topic for the CBSE board exam and CUET. Thank you for watching. Till then, keep studying, keep learning. I'll see you in the next class. Bye bye.